supports and resistance. It's one of the pillar in technical analysis. It's part of technical analysis. You are going to use it all the time when you'll be trading. There is no way you can trade technical without supports and resistance. So they will come in various forms, but in simple words, what are supports? Just like in our daily life, when someone is supporting you, that person wants you to prosper in life. That person wants you to succeed in life. That person wants you to go higher in life. The same with the Forex market. The levels at which price is being pushed up, it's being sent up, those levels are known as supports. Meaning, the market always moves up and down. Let me just share the screen of a normal MT5 chart that we're using with your senior colleagues. So if you look at the market here, it will go down and then up a bit, then down, then up a bit, then down, and then up, down there. So these levels, the bottoms, these levels where the price made a U-turn and started to go up, these levels are known as supports. So, and then it goes up until here. This level, when it reached this level, the price was pushed up. The price made a U-turn to go up. Then it came down again. And then at this level, this area, the price was pushed up, down there. So where the price was sent back historically, those levels are known as support. We can easily identify supports here. Let's just look at the bottoms or the lowest level. You can easily identify where the price was sent up. This level, it's known as a support. That is a support. This is a support. We have a lot of supports here. This is a support. This is a support as well. This is a support. This is a support as well. We have another support. That is another support. So we are going to look at some other things in the days to come known as supply and demand, more like support. It's just another support levels that I went to private school. But for now, those are support level. And the opposite is the resistance. The resistance level is the levels where the price is being rejected or the price is being sent down. It's the levels where the sellers start to take control from the buyers. So, for example, the opposite of support is resistance. So up here, the levels where the price was sent are down. Those are the resistance levels, or those are the resistance zone. So up, it's resistance. At the bottom, it's support. Is it clear there? Or we have questions on that before we can proceed?
It's clear.
All right, it's clear. Then we get back to our slide. So support, it refers to the horizontal lines at which price level that an asset does not fall. This is just a funny English word, but where it stops falling means it starts to rise. So if we look here at this level, what we have here is the price was falling, and then when it reached at this level, it stopped falling, it started to rise. It was being supported. So, and then when it came back to this level, the price stopped falling again, it started to rise. So in technical analysis, our expectation, or what we do is we want to identify this level. If you identify, for example, that this is a support level, the next time the price comes back to this level, you are expecting that support level to be respected, or the price to be supported at that same level that you have identified for it to go up. That is the main purpose of support. So one can ask a simple question, or for beginners, usually ask, how do I know when to buy and when to sell? Using technical analysis, support is one of the levels. I had a call from the office. Let me just pick it up. Here's along. Okay, I'll check it out. All right. Let us hold. I have a payment to make. There's someone withdrawing about a 450 USD. That is about a 7,920. We usually process deposits and withdrawals, and for big amounts, it's I have to make the payment. Just pay to sell. It will take me about a minute to two to verify the payment. Yeah. All right, we may now continue. Thanks for your patience. Okay, so what we have here, since our slide pushed down. So the resistance level, these are the levels where the price are being rejected. So what we have is when the price is going up like this, and then it creates a resistance level at that area, then what will happen? The price will be sent back. Why do traders care? the next time this price comes back to this level, you'll be looking for a selling opportunity. You can take a sell at this area, expecting the market to respect this resistance zone for it to push down there. The same as support. When price is being supported in that area, so the next time the price comes back in that area, you'll be looking for buying opportunity in that area. That is the purpose of supports and resistance. Okay, moving forward. We have what is known, a concept that is known as what happens when price is not respecting the resistance or the support level. So what will happen is when price is not respecting the support or the resistance level, this is what to expect. Let's assume the price was going up and then it created a resistance zone, it goes down. And then it goes up again. Your expectation will be for the price to respect that resistance. What will happen when the price does not respect that resistance? So if the price doesn't respect that resistance, we refer to it as a break of a resistance or a violation of a resistance. Those are the terms that are used in Forex. You'll either say the price broke the resistance, or you'll either say the price violated the resistance. That is what you can say. So what will happen is when the price break, now I'll start using those words. When the price break this resistance level, or it violates this resistance level, it will push up. So what you'll expect is, if this resistance is broken, when the price comes back to this level, you are still expecting the price to respect this area that was previously known as a resistance, but it will respect it in an opposite manner. What do I mean by that? So in Forex, if a resistance is broken, it becomes a support, meaning what was previously known as a resistance becomes a support. What you will have is when the price will be broken, when the price will come back here, this was a resistance, remember? It will now act as a support. We are expecting the market to respect this area, but in an opposite manner, meaning when the price comes back here, we are expecting it to bounce up to buy in that area. So in simple terms, when a resistance is violated or it's broken, it becomes a support. When a support is broken, it becomes a resistance. So this is what we are having here. See what we have here. This was a support, then price went up, then down here. What we're expecting is for the price to be respected at that area. It did respect a bit, and then it went up again. And then what happened? It came to violate this area. So when price came back to this area, it respected this area, but in an opposite manner. So what was known as a support became a resistance. That's why the price was sent down, or the price melted to go down there. So the same. So if you look here, you will identify another support. This was a support. And then when the price violated that support, when the price came back here, it respected that support, but in an opposite manner. That support became a resistance. The price started to sell down there. So when you are trading using supports and resistance, this is what you'll be following. You will identify your support and then expecting the price to respect the support. If price breaks that support, when price comes back to that same level, you will expect the price to be respected, but in an opposite manner. At that area, when the price comes back in that zone, you take your sell, you enter into selling positions. So what we have now is the idea of support and resistance. It's not a specific point. There is no way to tell where the price will reverse and go back. So you are going to treat this as an area, as a zone instead of a point, meaning this whole area you will highlight or mark and expecting the price to respect that area, not a specific point. That is what we have on supports and resistance turning into an opposite direction. And then we have what is known as a trend. What is a trend? A trend, it's just as the word itself, it's self-explanatory. It's an English word. What is a trend? A trend is a common behavior, something that most people are doing. It's kind of okay. So in forex, a trend, it's when the market behaves in this way. We have two types of trends in forex. So we also just have two types of direction. The market or the price either goes up or it goes down. So what you have is either the price is going up or whether the price is going down. What happens if the price is not going up or down unless it's just going sideways? Those are the most two common, up and down. And then the third one, it's the sideways. So how the market moves is the market moves in trends, and there's a common concept where you will always follow, which we always say as trader that the trend is your friend. What is a trend? In a market where the price is going up, the market moves in this manner. The price doesn't just go straight up. It doesn't shoot like all the way straight. It wings like a snake. So the market will go up and then down, then up again, then down, then up again, then down, then up again. So how do you identify a trend? You identify a trend by what is known as higher highs and higher low. When the market is creating a series of higher highs and higher low, that is when you identify, or that is when you know that this is a trend and this is not a trend. Okay, how do you identify or how do you establish a trend? You identify that using higher highs and higher lows. Therefore, there is higher high, higher low, and then there's lower high and lower low. I'll explain what are those things. So when the price is going up, it will go up a bit, creating a high, né? And then it will go down a bit. So this will be our high number one. Ne? Let's just put a 1 there. And then it will go down, creating a low. Ne? We can call this low, maybe low number 1. Let's say L1. And then from there, it will push to go high again, higher than the previous first high. So this is, let's say this is our high number 1. It will go up higher than the previous H1, the previous first high. So, and then when it goes up that way, this becomes our high number 2. Ne? High number 2 is higher than high number 1. And then this high number 2, it will be known as a higher high. It's higher than the previous high. So it will be known as a higher high. Ne? And then it will push up again, creating a new low, but this low should be, or it must be, higher than the previous low. Remember our low number 1. Our low number 2 will be somewhere here, L2. So this will be our low number 2, but this low number 2 will be low, it will be higher. Low number 2 is higher than low number 1. Can you see? So this low number 2, it's known as higher low. You get it? It's known as a higher low because it's higher than the previous low. And then it will go and create a new high, high number 3. This high number 3 will be higher than high number 2. So our high number 3 will be higher than high number 2. And this high number 3 will be known as the new high, and it will be referred to as the market is creating a higher high. You get it? And then there is one rule that we should expect. This behavior, when the market is going up, we expect it to continue to repeat itself. The market always repeats itself. So what we are expecting from this behavior is, we are expecting this market to go down a bit. This move, when the market is going down, it's known as a pullback or a retracement. So when we say the market is pulling back, we are referring to this move. Or when the market is retracing, we are also referring to this move. So this market, in a situation where the market is going up in general, where the wind is going up, we refer to it as an uptrend. The trend is, it's trending up, it's going up. It's known as an uptrend. Ne? What we are expecting is, during this retracement, it can pull back as much as it wants, but it should never pass this previous low. That is the rule of an uptrend. Ne? It can pull back to close as it wants, but it should never go lower than our previous low. Then from there, it will go and make a new high. And this new high should always be higher than the previous high that was created. So that is what is referred to as an uptrend. The opposite also holds. So in case when the market is going down, we want it to do the same thing. We want the market to establish a series of lower low and lower high. That is the opposite of the higher high and the higher low. So that is, we want the market to go down a bit, and then it will pull back. But this pullback should not be higher than the previous high, and then it will go lower than the previous low. This is known as a lower low, and then going up like that, then down, and then up, then down, and so on. So this is forming lower lows. These are lower high because it's lower than the previous low that we have there. So if you look at the real market, if we look at on the MT5 chart, we should be able to identify this kind of behavior in the market. This is what we are referring to wherever you pull your chart. So let's say we are here. This is the kind of behavior we should expect from the market. This is how we know when to buy and when to sell. We are still under technical analysis. It's by using this kind of concept. Let's say the market was here. This is a low, né? And then it went up a bit, creating a high, creating a low, and then this low is higher than the previous one, then creating a new high higher than the previous one, then creating a low again, but it should be higher than the previous one. So this, it's when you see this kind of behavior, just even 3 points behaving this way, maybe point number 1, point number 2, point number 3, you should already be alerted that the market is about to go up. You start to look for your buying opportunities. So then from here, it skyrocketed until they just pulled back a bit, making a new high there. Then it came to make a new low. So here, it's a bit tricky now. Let me not confuse you. So here, it made a new high. It made a new low. So see what happened here. See what happened here. This was a new high. It came to make a new low. This high failed to take down this previous high. Can you see that? When you see this kind of behavior, you should be alerted that the market is already about to turn around just by using higher highs and higher lows, studying the behavior of how this market is moving. So then it pulls down a bit. So if you see here, this low or this, this new low was lower than the previous low. And then this high, it failed to take down the new high. So what are you expecting? What you're expecting is this kind of behavior. You could be looking for a selling opportunity there and then there. So, but in contrary, what we have is from here, it changed the behavior again. It came to take out the new high again. So now what we are seeing based on our trend, this was an uptrend. This was a retracement of a downtrend. Then it started to create a new uptrend again, and so on. So if we are to scroll through, you will be able to identify these kind of behaviors everywhere on the market. So, but what I'm trying to explain to you is the idea of trends. How do you identify a trend? So, if, for example, here, the market was going down, né? And then from there, what happened? It pulled back, it went down again, it pulled back, it went down. This is what? It's a downtrend, right? But then what we are seeing here, we are seeing the market is pushing up, down, pushing up, down. What are we seeing here? The market is turning around. What are we seeing? It's an uptrend. So if you are looking at, we have a chart. Network is not stable today. It seems me I'm missing out. Is the network fine on your end? To me, it looks okay, but we have someone that did comment in our chat room. Dina.
Mine is okay.
Dina, are you the same Dina that we were in the practical session with?
No, I'm not the one.
It seems we have two Dinas, because at 7:30 and 8:30 I had a session where we were going live trading with the senior students. Okay, no, it's not a problem. So then you have a namesake that you will meet in the other group. Okay.
Yeah. Mine is in the Nashe.
On the Nashe. Okay, good.
Yeah.
So what we are expecting is we are following, right? Dina,
There?
you are following, right?
Yeah, I am.
Okay, good. So what we are expecting is what? We can already tell that this is creating an uptrend.
Uptrend.
Yeah, it's creating an uptrend. So if this can be a trading strategy. We have a lot of behaviors that the market makes. This is one of them. So this can be a trading strategy. How do you know when to buy and when to sell? Using this behavior, you can tell that if the market comes here, what do you do? Around this area, you can buy, expecting it to go a bit up. If it goes up, when it pulls back, what do? You will be looking for buying opportunities in that area, looking for the market to go up. There are other tools that we are going to use to pinpoint where to buy exactly. Because now, you might not be sure. Should you buy here? Should you buy here? Should you buy here? So long it's not violating this whole area, it's a buying area. When you buy, we're gonna look at those things in the days to come, when you're gonna look at other behaviors and other tools. But that is what I wanted to explain to you on uptrend. So this is what is explained in the slide. I will share this slide with you and we'll be done with it. So this is a low, that is a high, and this is a higher low, higher than the previous low, like I was explaining. This is a higher high, higher low, higher high. So this is an uptrend. That is what referred to as an uptrend. And then in a downtrend, you have a high, and then you have a lower high, low, lower low, lower high, and lower low. You don't have to memorize, we have 4 words, lower or 4 terms, lower low, lower high, lower low, lower low. You get it? Don't get confused. All you need to know, for now, don't worry about the words. All you need to know is 2 words, high and low. If you see that the market is making new high, then it's simply an uptrend. If you see that the market is making new low, it's simply a downtrend. Is it clear on trends before we can move to the next section?
Yes, sir.
Okay, good. Then what happens? Okay, good. Then what happens if the market is not trending? Then we refer to as a ranging market, or the market is moving sideways. This is the case where the market is not making new highs or the market is not making new lows. It's just ranging. It will go up, creating a support. Ne? It will go down. No. What am I saying? It will go down, creating a support, then go up, create a resistance. Then it will go down again. It will be rejected to create a support in that same zone. It will go up again, creating a resistance in that zone, goes down, creating a support in that zone. You see, and then it will go up again, creating a resistance. If you look at this kind of behavior, the market is not leaving this zone, the resistance level. It's being respected continuously, and this support, it's being respected continuously. These kind of behaviors, it's known as accumulation, né? Or the market is accumulating, or we refer to it, the market is consolidating. There's the concept of accumulation and distribution. I'll show you on the chart. So in this kind of behavior, we simply say in simple English, the market is resting. So what you do as a trader when you identify this kind of behavior, if this is a strategy that can work for you, you'll be looking at selling here, you can take your profit here, you buy again, you leave, you exit the selling position, you enter a buy, you can take your profit, you sell, you swing. This is known as swinging. It's like you are on a swing. So that is how you trade a ranging or a sideways market. So if we look on the chart, we'll identify those kind of behavior always. So if you see here, just that we are on the daily time frame, if you see at this area here, what you see, this is a daily time frame. We didn't talk about candlestick, but the market stayed here for days, meaning it wasn't going up, it wasn't going down, it was just ranging. So this kind of behavior, when a lot of I don't want to use candlesticks because we didn't talk about candlesticks yet. We're going to talk about candlesticks hopefully from tomorrow. When the market stays here for long, these things that you are seeing here, they are known as candlesticks. It's known as it's accumulating. Then when the market launches from that area, it's known as distribution. So the market moves in that behavior. It accumulates, then it launches either up or down, known as a distribution. And then it launches down here. It accumulated a bit here, sideways. This is a sideways. This is an uptrend. This is a downtrend. This can be a sideways. You see it. Then it launches down. Then it accumulates. It launch. It accumulates. It launch. It accumulates. It launch. Now, as we speak, the market is accumulating. So the market moves like soldiers. You know how soldiers move? It's like they stay at a certain place, planning where are their enemies. They do calculations. They plan their next move. From there, they attack. Then they migrate to a new place. They plan a new attack. Then what do? They attack. So that's the kind of behavior on how the market moves. It never moves straight like throughout. It attacks, it rests, it either attacks at the bottom. By that, it either shoots at the bottom, then it will find a place to rest, then it will shoot up, it will find a place to rest, and so on. So those are the other things that we should be aware of. And then we have what is known as trend lines. What is a trend line? It's just a continuation of trends. So this is a combination of trends and supports and resistance. This is where trend lines are born from. So we're going to look at how to draw a trend line. These are the points that we'll look at. We'll look at it on the chart. How to draw a trend line. Identification of valid and invalid trend lines. Common mistakes in drawing trend lines and use of trend lines in our strategy. When you go practical, we're going to use a strategy that will apply trend lines, but let's just go the basics of trend lines for now. What is a trend line? A trend line is a line that is created when the market is trending. So meaning, let me erase or remove these things. Hey, in case of an uptrend, the market will go down. No, up. The market will go up, then down, then to go up, then down, then up. So this kind of behavior, this will be a resistance. This is a resistance. This, let's say it's a resistance. Then this is a support, and then this is a support. In most cases, it is possible for you to take a line, or it is possible for this kind of behavior to move respecting a diagonal line, meaning you can take this you can take a line. They are drawing tools on your MT5, but you can simply take a line when you see this kind of behavior and connect two visible lines, very visible. You take this straight line. These are tools you will find on your MT5. You connect from the tip of the first line to the tip of the from the tip of the first support to the tip of the second support, in an uptrend. So this straight line, that is what is known as a trend line. Why do we draw it? We draw it in expectation that when the market comes to this line again, we are expecting it to respect this line as a support line and go up there. So you will be looking for buying opportunities at this line. That line is known as a trend line. And the opposite also holds. That is, if you draw this line at the top, you just connect 2 or 3 visible points like this. That is what is known as a trend line. When the market goes back to that line, or simply when you have, you don't need 3 or a lot of lines. 2 lines are enough. Let's say you have this kind of behavior. The market goes up, down, up, down. So when it's somewhere here, you can take your straight line. You join these 2 previous high. You join it like that. What you are expecting in this case is the third time. This is one of our most used strategy that we'll use at practical. The third time when this price touches this line, we are expecting it to be an area or to be a resistance zone where price will be sent to go down, to go retrace, the price to retrace in this area. So this area is where we'll be looking for our selling opportunity. So these lines are known as trend lines. So the opposite also holds in a selling market. When you have the market going down, so this way. So you can simply connect this line, and then the next time the price comes here, you can look for your selling opportunity there. So these lines that you are drawing, the straight lines, are known as trend lines. So we can simply identify these lines in the market. Can you see what I drew here at 7:30 with the practical students? So whenever you are free, you can always make time to attend the practical. It will be of your own benefit. Just do not participate for now. There are a lot of things that you need to we need to cover. Do not participate in the practical. Just attend and learn. We have a message in the chat room. Okay, we have Henry's request. Yeah, the meeting is being recorded. I will share it with you, Henry. For those with network problem, I see a number of us. I will upload it on YouTube, then share. I'll also try to edit it a bit to make it short, to remove the errors and all those other things. Okay, so what we have is we can see this series of higher highs that it's creating. What did we do? We just connected this level. We are now looking for buying and selling opportunities at those lines or at those areas. But simply, That is trend lines. Hope you understand how to draw them and what are trend lines. Is it clear there before we can move to our next topic? Are we fine on trend lines and how to draw them?
Yes.
Yes.
All right, good. We move to what is known as channels. Channel is just a sideways market or an uptrend or a downtrend, creating a channel. So what we have is we refer, the market moves in, I think the best way I can say, when you draw your trend line, let's just go back here. This, let's just use the same drawing. When you have the market moving, try to clean it up a bit. Okay. When the market moves in a downtrend, then you put your trend line there. And then you put another trend line here at the bottom. So what is happening is we call this area where the market keeps bouncing as it's moving. This area where the market keeps bouncing, this area is known as a channel. So this area here, it's known as a channel. You get it? So when in case where the market is going down, this is known as a descending channel. Ne? In an uptrend, we create an ascending channel. In a sideways, it's just a ranging channel or a sideways channel. So that is just those are just terms, just a continuation of what we already did. We have a nice drawing here. Can you see what we have here? What we have is, this was an uptrend, ne? You see. And then when you put a trend line, this side on top and another trend line at the bottom. So this zone, it's known as a channel. Since the market was going up, it's an up channel. The up channel is also known as an ascending channel. Ne? That is just a special name. And then in case when the market was going down, you put your trend lines, this creates a channel that is known as a down or in descending channel. And then this is an ascending channel, another descending channel, a sideways channel. So our expectation when you have a channel is the price should not leave the channel, or else your theory of an uptrend will be violated. Meaning, when you have a channel, you want to buy and sell while, or the price should be within that channel. What do I mean by that? How do we apply channels to trade? When you have an uptrend, for example, né? What we are expecting is we do not want the price. That is the last thing we want to see. We do not want the price to leave our channel. The price should go up, then down, then up, then down. So when you are buying, your expectation is, if you have a channel, the price should not get out of this channel to come in this area. You do not want to see that. What you want when you are buying is, when you place your buy here, you only want to see the price going up, respecting or being kept in that channel. You get it? So what you have is, you will buy here, setting your stop loss below here. Why? You are using your channel as a measure to know where to set your stop loss. What you are expecting is within this channel, if the price leaves that channel, then you should be out of the market. So then the price just does not want to respect your analysis, so to say. There are cases where the market will be broken, where the channels will be broken. That is known as fake breakouts and fake what? There's another term that is used, but let's just say fake breakout. So we have to be able to know how do we go about it in case when the market is creating this fake breakout, but that is simply a channel. Do you understand what are channels before we can move to another concept? Or do we have questions on that?
We are fine.
We understand.
Okay, good. Let's see what we have down here. We are pushing with our slide. That is the importance of trend lines. Can you see? All these terms, they are getting to work together. We started with support and resistance, higher highs, higher lows, channels, trend lines. So putting these things together, it's getting to make some sense. That's why I advise you, there are still a lot there's still a lot of things that you need to learn that we are going to put together for things to make more sense when we are trading. So if you have to participate in the practical sessions, just participate in the session, but do not participate. But no. Now I'm contradicting myself. If you have to participate in the practical, just watch, but do not trade live. Maybe on a demo, it's fine. You can practice on a demo and see if you can catch up. Last but not least, the last thing we are going to look at tonight is the type of charts. Let me check. Sorry, guys. Our office runs until 10. And I see I have some messages that needs my attention here on the phone. Okay, fine. Let's proceed. Last but not least, we are going to look at type of charts. Type of chart, it's simply how do price get displaced? How do we read price in Forex? This concept, it's more like the same than like what we have, what we used to do at school. Remember, price was being, I don't know what's the correct word to use, but we used to display in mathematics or read or analyze data, the topic of statistics using different type of charts. We were having things that we were calling bar charts, remember? Then the same data or the same information, we used to interpret it. I think that is the word I was looking for. We used to interpret it using different styles. Sometimes we'll use a bar chart, the same information, we'll interpret it using a bar graph. The same information, we'll interpret it using a pictograph, and so on. You remember, ne? The same with the price. The price moves up and down, and it uses different type of charts. Sometimes the price uses line charts, or you can use a line chart to identify how the price is moving. And then let me just round up here. Okay, to identify how the price is moving using a line chart, that is the first thing that we have. This is a simple line. I'll show you proper on the MT5 platform. It looks better than here. And then a bar chart. This is the section of the bar chart. And the famous one, this is the god of trading, candlesticks. It's our favorite because Okay, you will find these things here in this section on your MT5. I'm just teaching you for the sake of teaching, but most of the cases will be looking at this price using a candlestick. Rare cases will be using a line chart. So if you come on your MT5 up there, up here in this section here, you are going to see these three types of options that you can display your price. So the first one that we have, it's a bar chart. This is the shortcut or the button for the bar chart. And then we have the candlestick option, and then we have the line chart option. So let's start with the line chart because it's more basic and self-explanatory. So if we click on the line chart, we can try to make it big. Let's see if we can. Yeah, but hope you can see before we'll waste time here. Okay. You should be able to make it big in the settings. I'm trying to right click, but it's not. I haven't done it in a while, but if you play around with these settings, we should be able to change the size, chart, what the scales and so on, but we are not going to use it anyway. But what we are seeing is this, né? This is the message here. Let's not waste time here. What we are seeing is this. See how the price moved. Let's just put a big line now ourselves. See how the price moved. The price moved up and then it consolidated here. It took a break or it accumulated, it consolidated, and then it pushed down. It pushed up a bit, it pushed down, then it pushed up. This is what the line is showing us. It's showing us the history on how the price moved. Can you see? So this same information can be displayed using bar chart. You see. Can you see what we drew? This is just the same pattern on how the price moved, but in a different format. This was the traditional way when Forex started, lines and bar charts. And then later, we started to have what we now famously know as candlesticks. Most of the time, we are going to use candlesticks, this option for candlesticks. Later, at a later stage, the Japanese invented what are known as, or famously known as candlesticks, also known as Japanese candlesticks. We're gonna have a separate lesson here, like I said, tomorrow, hopefully tomorrow on candlestick. What are candlesticks? How are they formed? How do you interpret them? How do you use them to trade? That is what we're gonna learn tomorrow. It's an interesting topic. Please do not miss. Please fix your network. Candlesticks, it's the pillar of Forex trading. Do not miss the lesson for tomorrow, okay? So this is another way that the price is being interpreted using this thing that looks like candle. You know, some are short, some are green, some are red. We're gonna learn them tomorrow in detail. But this brings us to the end of our session for tonight, unless you have questions on what we covered, but that is what I prepared for you. Thank you so much for your time and for paying attention to me preaching and delaying, cutting the session in the middle. Okay, do we have questions? Q&A sessions now. Questions, comments on what we covered? Is it clear?
I want to ask about support and resistance. How do I draw those things on my chart?
You don't draw them. Support and resistance, the price moves. We don't control how the price moves, né? You only identify them. You don't draw them. Meaning, you will be seeing the price moving up by itself, né? We're gonna learn later what moves the market, but for now, let's just know the price move. What moves the market, we'll learn it in detail later, né? When the price goes up, you'll be like, the price was going down, now it went up. So now this price, this level where it made a U-turn, you identify it and mark it as a support in this case. Ne? You don't draw it.
Yeah.
The price itself draw it for you. Ne? And
I mean that marking thing, because I don't even know how to put those lines on my chart.
how to put the lines? We're gonna learn how to put the lines, but you can simply, let me just
Yeah.
quickly guide you or tell you how to put the line. The lines, you'll find them on your platform, ne? They are already there on MT5. You just need to know where to find it. For example, if you look at this section up here, you can see there are type of lines. This is where you find it on your MT5 platform.
Okay.
So in this section, ne, if they are not there, there is a way to put them there. For example, if you want a vertical line, this one is a vertical line there. You just bring your mouse. Are you following?
Yes, I am.
You click on that line, you select it. They are known as drawing tools. Then you can click where you want to put it. The vertical line will be there. And you can move it around to wherever you want. It's already there on MP5. Ne?
Yes.
And then there's a trick to moving this line that you need to understand as well. How do you move this line? When you paste it on your chart, if you double click it, there are some small things that it's creating. This shows that it's in editable mode. Ne? Just like Microsoft Word, you know, sometimes it cannot allow you to edit, sometimes you can edit. So when you double click, if you want it to move, it should show this box. There's a small box at the end of it. Hope you can see that box, and there's another box here. When these boxes are there, it means it can now move. When you do not want it to move, you double click it, those boxes will disappear. Like now, if we try to move, it can't move. It's just the whole chart that is moving. But if you double click it, then you drag, the line can move. This is another trick that we're gonna learn. And then if you want a horizontal line, you just go there, you can see a horizontal line. You click it, you bring it on the chart, you paste, you click again, it will appear. You can also move it around. If you want a trend line, it's the diagonal line. You click on it, you click from where you want to start, then you move your mouse, you drag all the way to where you want it to end. Ne? And you can also double click for it to stop moving. If you double click on it, now it's in editable mode. Now it's in editable mode. It will be able to move, you see. And you can still touch or drag it from the tip of it and move it around to wherever you want. You can move here, you throw it there. You can touch it there, you throw. If you touch it in the middle, you can move it, the whole thing. So that is how to draw those lines.
Yeah, now I understand. Thank you so much.
Okay, most welcome. You are like the other Ndeshi in the other section. I have to introduce you guys. She asks a lot of questions. She's very active. The good thing is she really have mastered the things very well. You know, when you ask, at least your mind opens up and you'll never forget that thing again. Please do not leave the Zoom session without fully understanding the lesson for the day. I always stick around. I am here. Please ask me as many questions as you can. But I'll advise you ask questions based on what we have covered. Because the other things, don't worry, we'll get there. We have designed a full course of whatever you are wondering, how will I do this? We're going to get there. What we have covered, make sure you understand everything before you leave the Zoom session. But for now, let me excuse those that feel they need to leave. We are done. If you feel you are fine, Have a good night ahead. We meet tomorrow same time. If you feel you still have questions and a lot of things, I'm still around. Stick around. Let's discuss. Q&A session.
Bye.
Bye. See you tomorrow.
Okay.
Any question, or we can call it a night?
To my side, I don't have a question, so it was well understood.
All right, great. All right, let's call it a night. We meet tomorrow, same time. Thank you so much.